The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we're off 4 points on the S&P cash as we open the show. 2 billion shares, so volume just mildly better than the last 2 days. So up here at higher levels, not a lot of volume, not a lot of push. But of course, what do we have tomorrow? Really starting the first full day of fund buying, and then of course come back Monday and Tuesday. So my guess is that we have a small bias upward over the next couple of days, maybe an opportunity to go after some short covering on some stocks, because that's about all that's moving. But we have all kinds of stuff happening. And as I'm reminded, it is time to digress away. Of course, the big news out here is the FCC. We'll get to that in just a minute. I've been trying to read everything I can about it since it basically started. The vote was over just after about 1:15 today. And we got some interesting feedback from one of the founders of Apple. Of course, he's the only one still alive, so you can guess who it was. But it is one of these days where you do see what I'm looking at in the dollar index. Of course, if you're looking at the dollar index, and I basically put this in my newsletter, when you hang around highs for a long time and you don't get a significant pullback, more than likely you're going to bust out. And of course, we've got that pretty much today. If we don't see a pullback in the dollar out here, we're going to continue to see probably a move up to the 98 level. And the only thing that was kind of interesting to me was that they were able to hold it down. It looked like everybody and their dog, and their dog's dog, and their dog's 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 dog. I can continue to do this if you want. Anyway, was trying to take every shekel, ruble, well, what else was there out there? Shekels and rubles and pesos, and make a way to the counter to buy a dollar. And of course, they're out there buying the dollar like there is no tomorrow today. Boy, what mixed metaphors. I'm going to win that mixed metaphor award next year for sure. Anyway, we've got it up here, and of course it's probably going to go through these highs, I suspect, over the next day or two. And that is all about the Fed not raising rates anytime soon. And of course, what we've seen in Europe, and they're just going to slowly kick the can down the road until no one cares anymore. But the result will be the same, although they'll just drag it out. And of course, when we talk about central bankers, they know that they can't forever hold back the tide of supply and demand. What they can do is slow it down, though. And that's what probably the last few weeks of the dollar up here has been. Every time we've gotten up to this level, the central bankers have come out and slammed it. What we haven't had is a slam yet today. And my guess is that they pretty much every time it's hit this level have come in and whacked it really quickly. And it, just looking at the movement out here, doesn't look like they are whacking it today. So they may have given up on that. And yeah, that dollar should be, we've got a lot of stored up energy up here. Unless they're able to whack it down, my guess is we see a strong movement over the next couple of weeks up to that 98 level, where I think it's probably going to top out. And maybe it goes all the way to parity at $1 to the rest of the currencies out here. But I think that's probably going to be the end of the beginning of that move. And of course, over the last few days, we've seen a lot of companies say that it is the dollar. It's all about the Benjamins. And those Benjamins have to do with companies like HP down $3 and others. It's just hard to see how that happens. Plus the 1-2 whammy of the NSA and everybody's colon. And of course, that pretty much over the last couple of days, we've seen the Chinese basically say that they're not going to allow anybody to buy iPhones or Cisco routers or basically anything we build, because of course the NSA's been into everything. And I don't dislike that they try to do everything. I just think that since they took the easy route, Americans will pay. And that's pretty much every time the government decides to circumvent the Constitution and or take the easy way out, our citizens pay. And this time we're going to probably be paying in lower stock prices as they're unable to send their products overseas. But we've got stuff going on. Anyway, it got Apple with its own set of problems. We've got crude with its own set of problems, and we'll be talking about those as we go through the rest of the day. Again, I'm expecting that we start seeing some mild pressure either start at the close today or tomorrow for the end of that fund buying. I have not gotten the results from Trim Tabs yet on just how much cash is coming in and out of the markets. My guess is that I'll probably get that in my email basket tomorrow morning or tonight. And that's going to give us a good read on what's going out and whether or not people are really selling into this. What you dislike about a market is coming up to these highs is not instantly breaking out, is that it breaks out and then pulls back and is a false breakout. Now, could we go up to 2150 or something over the next couple of days? I think it's certainly a possibility. But again, I'm going to wait till I get the numbers from Trim Tabs to see how much cash actually is trying to come in through ETFs over the next couple of days. There's an old saying in the stock market, especially for brokers, that is, if you're not buying the top, you're not trying. And my guess is that all these guys are going to try to hold these things up as much as they can. It's unclear whether they can or not, but we've had several days of moving sideways. The dollar index certainly not helping today, but my guess is we're going to see a little bit of push for the next 2 or 3 days. If we don't break out by then, my guess is that we do not break out. But I'd say there's an 80% chance now of a false break to the upside, and that could take us to 2150. Continued no volume to that high could set a high. If we get volume in, then you probably want to hang on to long positions. But I'm looking for stocks with very high short interest out here for a possible squeeze over the next 3 or 4 days. Right now, we are 100% cash in the daily and have only one position in the long-term newsletter, and it's doing very well. Anyway, as I always digress out here.
And it's all just a little bit of history repeating.
I don't know if Andy Heck was around in 1993. We had him talking about him being around in 2001 for the World Trade Centers. But on this day in 1993, at 12:18 p.m., a terrorist bomb explodes in the parking garage of the World Trade Center in New York City, leaving a crater 60 feet wide and causing the collapse of several steel reinforced concrete floors. And, of course, a lot of injuries. 6 people were killed, more than 1,000 injured on that day. Kind of pales to the 9/11 day, but we quickly forget. And, of course, that quickly forgetting probably led to 2001 and 9/11. But it's human nature, and history always repeats. We try to ignore as much as we can the bad news if you're a politician and put a shine on the good news. But it always seems to come back around. I'm wondering if we are not trying to ignore and try the ostrich theory of world events out here, but it troubles me greatly. German consumer confidence came out at its highest level in 13 years. Of course, they're just a little bit behind us, and I suspect that basically Germany owns 80% of all of Europe, and that includes over to England. They've invested in everything. They've worked hard. After losing the Second World War, they got into gear, much like Japan, and they're peaking kind of late in the cycle, most likely because they got a lot of German immigrants from the east side that were used to living the life of poverty, but kind of acclimating to the Western views of democracy and capitalism fairly quickly. And I think a lot of those folks, there was a lot of cheap labor to come from East Germany. I think that's continuing to drive Germany's domination of all things Europe. They also have a lot of wonderful natural resources like we have, like the Mississippi. Theirs, of course, is the Danube, and makes it very easy to move things like raw materials up and down to heavy manufacturing, which is one of the reasons why they continue to do well, is they have not gone to a consumer economy straightly like we have. But take a look at Germany. Things going well there, while Rome burns everywhere around them. And of course, the FCC, we said we'd talk about this, probably going to go through the next segment too. Before they got into net neutrality, which we'll get into in a minute, they tackled the precedent for municipal broadband. The evil Satan's spawn, otherwise known as Comcast and Time Warner and the rest of their ilk. If you don't and haven't listened to the show for a long time, those kind of cable customers were the company I worked for. It's major, a lot of major equipment we sold to them. I remember my boss that had been around for a long time said that they were nothing more than ditch diggers. They'd dig a ditch and throw a cable in it, and if it worked, it was fine. If it didn't work, it was fine. They got and basically bought the local municipalities off with all kinds of graft and maybe money coming back through the local baseball teams and basically all the standard stuff that you have to do. And of course, it's always worse at local levels. There's nothing worse than the PTA when it comes to politicians. This is where the worst of the worst get sorted out before they become aldermen and then become mayors, and slowly the riffraff and the Hitler Youth get the worst of the Hitler Youth get hopefully weeded out, but not always. But anyway, these companies now have a big problem in the fact that they cannot be they can't use their heavy cash locally to make sure that people don't form their own broadband for the cities. Anyway, we'll be back in just a minute to talk more about this.
TFNN excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come in toward the bottom of the hour here, and we look at the S&P cash, what do we have? It is 2108.84. That's off 5 points on the S&P cash, but very light volume, $2.12 billion. My guess is that we are now waiting for some kind of government shutdown deal, and as soon as that's over, we're going to probably see all the pigs back at the trough out here. And I don't think you can say anything other than that. And they'll want to do something at the end of the month. And you can guess what it is.
Let's put some lipstick on this pig.
That's what they're going to do. They're going to put some lipstick on this pig and do some window dressing the last couple of days of the month. Anyway, we were talking about net neutrality. Of course, one of the big things that happened kind of quietly out here was that they passed the municipal broadband law, and that was because AT&T, probably the most egregious in this, and of course, they're spawns of Satan. If anybody's listened to this program long enough, I dealt with them. They have lied forever. They agree to all kinds of stuff, and this is going back 30 years. It's not like they've just started to do it. They have spent huge amounts of money on the whole net neutrality deal, but it looks like they were flummoxed by a huge tidal wave, a tsunami of cash from a couple of companies, and that is Netflix and even a monster load of cash from Google. And what all these companies were worried about was something that had been happening. And that is, if you've got a river and you are downstream on that river and you have to raise cattle, or you're raising corn or whatever, and you need the water, what's to keep somebody from just damming it up upstream and then saying, if you want a little bit of water, you're going to have to give me half of the cash. And that's basically what these companies like AT&T and Verizon and Comcast have all been doing, thinking that they could set up a fiefdom, and if they could buy enough people out, that would happen. So they were able to at least dam this up in Congress and push it, of course, to the administration. And as short as 6 months ago, the president was ready to say no to this through 4 million comments, cracking the website and basically crashing the website on a daily basis for comments to the FCC. I think they got the word that this was at least one gang that was not going to go quietly into that good night. Some of the things that the proponents had done was got their hacker buddies to hack the actual telephone systems of the FCC so that you could dial directly into everybody that had a say to it. There was phone numbers that were published that would ring directly to the desk of the FCC chairman, all the other chairmen, all the people that had regulatory, including the lawyers. You didn't hear a lot about this, but there was a major amount of kind of background hacking going on to allow these guys to go ahead and get to the root of the case. And I think it had quite a bit of effort and basically turning the head of a gentleman that is the head of the FCC, Wheeler, into somebody that had been at the feeding trough of Time Warner and Comcast for 10, 15 years, into somebody that basically is doing something that they do not like. Of course, John from HBO, I can't remember his last name, the English dude, compared him to a dingo eating babies. And of course, I've played the clip, I think, one time where the FCC chairman Wheeler said, "I am not a dingo." And of course, that took yet another round for John Oliver is his name. But a very interesting business out here. Now, what we don't know is what's going on with the details of what they passed. It has not come out. My guess is they're going to try to bury it into next week. So we're going to have to see. The devil is in the details. I can see how it could be hugely abused by anybody in the FCC. And now that it's this way, some of the scenarios have been put out there by the Mark Cuban. I think they're a little far-fetched, but a little closer-fetched could be trying to get the fairness doctrine implemented on the internet, because, of course, a lot of these people do not like anybody with free speech rights. And speaking of the Hitler Youth, we've got more of that when they come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And of course, there was a great spot on John Oliver's show, and I just have to play this clip because this is the response from Wheeler to John Oliver, a comedy show.
What did he think?
I think that it represents the high level of interest that exists in the topic in the country, and that's good. I would like to state for the record that I'm not a dingo.
And yes, that's it. He's not a dingo, but interesting nonetheless. Now, always wanting to bury the lead. Politicians like to see big things like the FCC to drown out other things that they try. One of the things is today that trying to use executive action today, they're trying to ban the top selling round of bullets. And it's kind of interesting to see what effect this is going to have in the market. We've seen in the last couple of years the huge run up that Smith & Wesson and some of the other arms manufacturers had. And I'm wondering if this is not going to reinvigorate that part of the market out there that is sure that they're basically coming after the guns. But, of course, all the people that said that they weren't, it's hard to see the action today as anything other than that. Of course, Cabela's a public company, is trying to rally the troops on there. I don't know if that puts a target on their back, as many other companies that have decided that they don't want to go along with the president's actions. But I would be watching all of those over the next couple of days to see what happens and whether or not it's a repeat of what we saw a couple of years ago with a huge run-up in those particular stocks because of the thought that, the government will do it. Now, it's unclear whether or not this can actually stand. The Supreme Court pretty much has told governments that a lot of this, what they do, is unconstitutional. My guess is that there will be a test of this fairly quickly in the courts, and if they follow the Supreme Court's rulings, my guess is this goes away fairly quickly. But it will continue. I don't know if this is just red meat for the faithful, or if this is something they're truly going to push. But we've seen a lot of things that pretty much have been unconstitutional, and the loyal opposition not pushing against. But if you are into those particular stocks, you might see a lot of actions over the next few days. And the question always comes up is, we've seen Staples taken to the woodshed by the president because they did something that he did not like. Would Cabela's be the next on that list? And when you get into the realm of politics and you're not throwing cash at a politician, does that not make you a target themselves? But I think this is going to be a pretty interesting sector, at least over the next few days, after we see what happens in this sector. But that's pretty much it. We're going to get to some stocks here fairly quickly. You can always give me a call at 877-927-6648. That's 877-927-6648. You can also put a message in the den and or email me at path@tfnn.com. What else has we got going on out here? Do we actually have a call? No. Okay. Let's go ahead and start looking at some of the stocks out here. Of course, the 3D printer companies have been in a funk, and not a lot of movement out here after DDD came in light this morning. Very high short interest in the sector. Not surprised to see that somebody came in and started buying this. Probably too short for them coming up light on their earnings. That being said, I think that there's still a test of the $27 level coming out here from February 3rd. And 8.6 million shares, pretty good indication that that is a high volume low that will get tested here in the near future. I think rather slowly. And, maybe you get a light volume test out here and these stocks finally start seeing some lows. SSYS, of course, came out with fairly poor earnings, got down to $51.55 on monster volume on February 3rd. It's kind of slowly moving back down to those levels. But could it be another week or 2 weeks before we see these things actually test those lows? I think that there certainly is the ability to do that. More than once, we've seen companies like Stratasys come down on heavy volume, come back, fill these gaps, and then fall back apart, which is certainly a scenario. But, basically, if you're thinking that there is a bottom, now that these stocks are down over 50% off their highs, think 131 on Stratasys, so it's $51.55 is much less than 50%. But you'd probably want to see this thing back into that candle on lighter volume, and you hope it doesn't go up on lighter volume and just fill the gap and then have to come all the way back down to these lows before you could do a decent trade on it. But those are a couple of them. Couple of stocks out there that I wanted to see how they were doing. Of course, Amazon, we've been watching that for a while. And let's take a quick look at the indexes out here. Off 6.5 points on the S&P cash, 2.2 billion shares. So very, very light volume to the downside at least so far. What do we have out here? Probably Amazon. Very interesting to see how, if there's any action in this. 383 was the high on March 13th of 2014. 6.8 million shares. This thing's come up with very light volume the last few days, back up into this gap. Yesterday we had 3.1 million shares. Today 2.1 million shares. So has the energy been fairly good back up into these highs? The answer is yes. Is it better than the huge move down from March 13th, 2014 to the low on May 9th of 2014? The answer is yes. And that huge gap up that we had, where they actually started to make money on the 30th of January, is where all that energy has come in. It's really kind of dampened out here. My guess is that a lot of people are wondering if the earnings continue in the next quarter, and or is this just a good time to sell when you can instead of when you have to? Unknown at this time. Another one I wanted to see how this thing was reacting was Jabil Circuits. This is going to probably tell us a lot more about the semiconductor sector, just like Altera and Xilinx do. This had a very light volume test of the February 29th high. Jabil is a assembler of products. That means that they take the components, put them all together, put them in a box, so you don't have to hire a bunch of people, especially if you're kicking off a new product where 50% of the sales are going to be in the first couple of months. Like Apple, you might hire a company like Jabil just to put them in boxes and get them ready. Apple, I think, does that all overseas. But if you're here on this side of the pond and you've got a consumer product, you want to kick it out real quick, they can put it all together in a box, get them ready, and put them on a train, get them to your warehouse on time. Anyway, the December 29th high, 22.44. 1.6 million shares, came in with 1 million shares on the 24th. Yesterday, 1.1 million shares. Today, very light volume out here. Again, the energy down is about the same as the energy up, so I wouldn't be shorting these, but it does show maybe that we're at a level that we're going to need to consolidate a little bit from. And the dollar, also an issue out here in the fact that if you are exporting any of these products, becomes somewhat problematic to do anything over here on this side of the pond, making exports more expensive. Another stock I wanted to see how it was going on was Potash, and we've been talking about the very, very light volumes out here. Down on light volume today, but looks like it's broken. And setting up a retest of the last major low at $33.87, 4.3 million shares. As we see the volume, it is not in here yet today, but pretty close trading range. I know Andy Heck had a Seeking Alpha, something about cow manure, but Potash is a little different out here. TNA. Which is the Directionary 3X Direction Small Cap Bull Fund, has come up to the March 4th, 2014 high that had 13 million shares. And this is very, very interesting to see the last 5 days of volume out here. If we go to the 20th, we had 6.6 million shares. The next day we had 5.5 million shares. The next day, 4.7 million shares. Yesterday, we had 4.2 million shares. Today, a higher high, 3.5 million shares so far. You want to start looking at some of these ETFs and see what kind of energy we're having up here at these highs. But pretty good indication that March 4th, 13 million shares. Tried to get into that on July 1st of last year on 8.2 million shares, and now a third high out here on even lighter volume, which makes it problematic to some extent. And I think we've got a phone call here. We also have a question in the den. And what is the IEBB has done more than a 2-to-1 expansion. Thought is supposed to employ us if you get more than a 1 to 618. Well, it certainly can do that. But again, I've talked about statistics are right about 3/4 of the time. You get into the far end of those bell curves, and markets move a lot farther than you think that they ever could. and I will refer you to Nassim's Taleb piece about statistics and how the market works. But it's called if you just Google Nassim Taleb fourth quadrant, you'll see. Daryl from Brownsville, Texas. How you doing today, Daryl?
Yes. Hi, Dave. Dave, do you have any, I apologize if you spoke about this earlier in your show. I just got back. Is there any ruling, any judgment on which way we might have a closing for the option expirations on the spiders? Is there a...
It's pretty wide right now. Now, all the work I've done on it suggests that it really becomes predictive when they go delta neutral, which is basically 7 trading days before expiration. So we're not in that. It's not widely predictive at this point. Again, so we're going to look into next month when options really start talking. And in March, that's going to be, looks like it's going to be the 11th of March. So that's when I start really looking at options and seeing what they do. I'll look at it the 10th and the 11th and the 12th, and that'll give me a good indication of what option market makers believe where the market's going to go. But till then, you don't have a good idea. When they go delta neutral, that tells you where they believe they're going, and that's where the real vote comes in. To this point, there's a lot of noise. But go ahead.
Do you have any use for maximum pain? Is that when you get into your March area that you're speaking about? Do you have that maximum pain type of number?
Do I have it now?
No. When you get, do you?
I'm telling you that. I'm telling you that maximum pain like number.
Yeah.
Starts to be useful on the 11th of March for that expiration on the 20th. Now gotcha. it becomes wild. And let me give you an idea of why it's probably not very predictive. Let's say that we've got the Super Bowl. Let's say the Super Bowl is going to be played next year, right?
Yes, sir.
Okay. Bets today, are they very predictive? Do they know whether or not a quarterback's going to be hurt? Do they know if a running back's going to shoot his girlfriend and get thrown in jail? I mean, there's all the stuff that can happen between now and then, right? The week before the Super Bowl, pretty much everybody has an idea who's going to be there. They're all locked up, so they can't go to the local strip club and shoot somebody. You get a much better idea of what's going on. And that's kind of what happens out here is you finally get the real vote when they go delta neutral. And that's why there's a lot of noise between now and then. But, what happens is they have a vested interest in making sure the market goes one way or the other or stays the same. And that's what you look for. Anyway, we'll be back in a minute. You can hang on if you've got more questions, but we'll be back for the last segment.
I'll follow up.
Okay.
Thank you.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
From Brandsville, are you still there?
I'm still here. My question, if it's okay, is do you have any, is there any credence to the end of the month, beginning of the month, you know, all these big operators piling in and buying all their companies they want so that there looks like on their spreadsheet they send out to their customers? You have any credence to the, I forget the term that people use.
They call it window dressing or end of the month buying. The answer is, one, you can verify this yourself. It would be easy just to take the stock data or index data and look at the last 2 or 3 days of the month, the first 3 days of the month, using Excel and figuring it out yourself. I will tell you, I've already done it. There's a high correlation, about 1% to 1.5% higher than randomness would ever say would happen. So statistically, you can test it. You're going to find that it's in there somewhere. So about 1.5% on the entire market on average. So there's that. You can also look at any of these ETFs and their charter. Now, their charter will say that they will be 100% invested sometime in the month. Now, there's a handful of them that say that they'll be 100% invested on the 15th. Then there's a bunch more, about 80% of them say that they'll be 100% invested within the last 2 or 3 days of the month, the first 2 days of the month, right? And the reason why this is if you're a money manager, people give you a bunch of cash. You go out and you buy funds, and then you, as the money manager, hedge those funds. So you need to know that your ETF has 100% of its cash in the long positions that you're looking for, or short, whatever they are, so that you know you're hedging a 100% long position. So the job of hedging comes to the money manager. The fund manager's job is to get the most he can out of generally a long position in technology, in restaurants, or whatever he's got, right? So there are two different people in this line, and that's where this whole thing comes in. The fund managers have to buy at the end of the month and be fully invested, and so they'll dump their cash at the end of the month. Most of these ETFs are owned or run by big places like Goldman Sachs or other big agencies, and they love the fact that at the end of the month, any shares that they want to dump, they can dump inside the company from one side to the other without really affecting the price of the stock. And, you know, that's been an area of shenanigans in the past. Back in 2000, 2002, there were a bunch of times when bad news would come out on a particular stock, and they would have sold it to an ETF at basically 15 minutes after the bad news came out. So there's a lot of shenanigans that go on in the background, but there is both a reason for it, and you can statistically test it if you like. The correlation feature in Excel is one of your best friends if you're a trader with any average high school math skills.
Well, I appreciate your help.
You bet. And we're out of time here today. I know we're going to have Tom O'Brien following me up for the next 2 hours. And then fresh off his webinar highlights, where he had a major close-up last night, will be Andy Heck. In the meantime, sell when you can and not when you have to. That also means buy, I guess, when you can, not when you have to. And hang on for the ride. We'll see you tomorrow, same bat channel, same bat time, and have a good evening.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.